break even. Okay, what is break even? Break even is the point where a business makes neither a profit nor a loss. Quite simply, at break even, the business will record a profit or loss figure of 0, so nothing at all. They haven't made a profit, they haven't made a loss, they have got a big fat 0. Okay, what are your thoughts to these questions? So, will a business be happy at reaching their break-even point? Some of you may say yes. Hopefully you said yes, because if the business is a brand new startup, then there's more likely than not it's going to be quite difficult to compete in a new market. So they may be happy at the end of their first year, they've broken even, they've survived, they've taken on the competition that's already established, and at the end of the year, they haven't made a loss, they haven't made a profit, but they've got a 0. They can work from that point, can't they? They can work from break-even point to try and improve. Some of you, however, may have said no. Probably if the business is more established, then they're not going to be happy at that. Imagine somebody like Marks and Spencer's reporting to their shareholders that they've only broken even. Their shareholders would not be impressed with that. Remember, the shareholders will get a dividend, so that's a share of the profits at the end of every year. So they're not going to be happy if they get nothing back for the money they've invested in a business. So it depends really on what sort of business you are to whether you would be happy with the break-even point being reached or not. Okay, this is a formula you need to learn regardless of what course you follow. So break-even is quite simply fixed costs divided by the selling price minus a variable cost. Notice that bit is in brackets at the bottom. So down here, the selling price minus variable cost is in brackets. We've got a name for that, which we call contribution. We're going to look at that later. But that is a formula you need to learn. So keep saying it, keep writing it down, keep practicing. Fixed cost divided by the selling price minus the variable costs. And remember to do the bit in brackets first. Okay, let's take a look at an example of how this works. So, in this case here, fixed cost divided by the selling price minus variable cost. Notice I've wrote out the formula. In the exam, or in any case, anything you do in business, I would advise you write out the formula. There are marks for that. In my case here, the business has got fixed costs of £5,000. It sells each item at £10, and it costs to make each item £5. This is talking about unit costs there. So the unit selling price, £10, the unit variable costs of £5. So let's do the 10 minus a 5 first. That will give us £5. So then let's divide 5,000 by 5. Nice simple maths. That should give us the answer of £1,000. Hopefully you follow where I've gone from there. Okay. So what does this actually tell us? Well, the break-even formula shows us how many items the organisation has to sell before it breaks even. So in that case there, we need to sell 1,000 items before the business gets its break-even point. So if you think about it, if it sells 999 items, it's making a loss. If it sells 101 items, then it's making a profit. Now, if I wanted to do that by revenue, obviously we know the selling price of each item is £10. You would just multiply it. So if you think it logically, 999 times £10, that would give you still a loss-making figure. 1,001 items times £10 would give you the profit-making figure. And strangely, 1,000 items times by the £10 would give you the break-even figure in numerical form. Get it right there. Okay, so let's go. Okay, let's take it a little bit further. You may see the break-even formula written as it is shown here below. So fixed cost divided by contribution. Now you're probably thinking, what is contribution? Well, contribution is actually the selling price minus the variable cost of the part we looked at before. Now contribution simply shows if each product is helping to make a profit for the business. Now why it's called contribution is quite simple. It's looking at how much does each item's profit contribute towards those fixed costs that you've got. So that's why we call it contribution. There's nothing complex about it, but you may get a question in an exam, or you may want to be asked at some point in the business world about contribution. So if you're asked about that question, make sure that you refer to this formula down here. So it's a selling price minus a variable cost. That is as simple as what contribution is. So as long as you remember that, you're perfectly fine. So break even, the advantage of this. Why do we carry out break even? Well, most businesses carry out break even, if we're being honest, because it's quite easy to do and it's simple to make a decision about how many items you have to sell before you make a profit. it's quite a useful tool to put into your business plan because it shows quite easy, is your business going to be successful? If you've got a ridiculous number of items to sell to break even, then probably not. But if you've got a more realistic figure, then yes, you probably can achieve that. It's a great tool, what we call for what-if analysis. So you can do different models. So what if I was to adjust my variable cost? What if I was to change my fixed costs? What if I was to adjust my selling price? So again, it's a great decision-making tool, and you can use this in any exams or any long answer questions you've got to try and show how things may change. It's quick, it's easy to calculate, especially if you did a formula or you set up on a spreadsheet. But you can do this, it's quite easy marks in an exam. And it enables assessment of costs and revenue in a business. So you can see how different costs, different levels of revenue may impact on your business. However, like most things, there are drawbacks. The most obvious one tends to be the data. Is it reliable? Where are these figures coming from? Are you just plucking them out of the air? Do you know where they're coming from? Have you taken into account inflation? So how prices might change? Have you taken into account external factors? Because that's one of the weaknesses. It normally doesn't think about them. What about your competition? What's happening in the economy? Are we in recession? Is the economy growing? So, what is happening? We've got to think about these things and we've got to take them into account. If we don't, it tends to be a massive weakness. It tends to be difficult to do break even when you're running a shop where you've got multiple products, because what do? Do you take an average selling price and an average variable cost, or do you do it for each number of items you sell? If you start doing that, it gets more time consuming. One of the other weaknesses of this is it assumes that costs and revenue never change with output. Now, hopefully as a business student, you're aware of this thing called an economy of scale. If not, check out one of the videos we've got on economies of scale. Because normally when you sell more items, you would tend to find your costs start to reduce, especially your variable costs, and at the same time you may have to reduce your expected revenue, your selling price, because they expect a discount for buying in bulk. One of these things that you've got to consider, which again, break-even analysis on its own doesn't typically consider. Okay, you probably want to visit our website, that's bbusinessb.co.uk. You can find a range of resources and questions related to this topic that we just covered, which would be great for practice to see if you can do it. Hopefully by the end of this lesson now, you can define and explain the purpose of break-even. In addition to this, you should be able to recall the formula, be able to calculate break-even, and assess the strengths and weaknesses of break-even. If you can't do that, go back, have a look at it again, check out our website, see if you can make sure you go into that exam with the knowledge that you can achieve a break-even. It is easy marks in any form of business. Okay, don't forget to follow me on Twitter or my YouTube channel. Don't forget to tweet me any areas of business which you want me to cover in the future. And check out our All Singing and Dancing new website, bbusinessb.co.uk.